Alright. Hey guys, how are you? We're just waiting for more viewers to go on. I know a lot of you guys probably are, watching the Super Bowl, having a lot of friends watching the Super Bowl. But guys, you know what? The reality is the Super Bowl game is not going to make you money, even if you're betting. That's pure gambling. At least tonight here with us three ladies, you're going to learn a skill that you're going to be able to utilize for a lifetime, guys. So make sure, get your people on this feed, guys. Get your people on here. Tag people. Start sharing this on Facebook. We need a lot more viewers than what we have on. These numbers are extremely low. And I refuse to cancel this webinar tonight just for people to watch the Super Bowl. My priorities is making money. So for those of you who are serious, and the ones that prefer watching the Super Bowl, I guess quite frankly, you guys are not that serious, the ones that are not on today, because I'm not gonna, change my webinar just for people to watch a game that is completely pointless. But that's my perspective. And we can be at Super Bowl parties ourselves or hanging out with our friends and family, but we're here with you guys because we have a commitment every Sunday at 9 p.m. to give you guys the most valuable information that we possibly can give you. So for those of you that are on, congratulations. That just tells me that you are a lot more serious and you're gonna be ahead of a lot more people. And for those that are not, it's their loss. But I promise you guys tonight, what Elba and Melissa have for you guys, I'm sure you're gonna just take in a lot of information. So make sure you have your notebooks, your pens, markers, because we're going to be going over a lot of information today. So we're going to just wait about another 2 more minutes to get more viewers on. But guys, I mean, these numbers are like, it's so low, it's ridiculous. I'm really kind of disappointed. I wish there was a lot more viewers on this because, we're really taking the time out of our day for you, because we can be relaxing, watching TV. She can be where her daughter, her family, same as for Elba. These two ladies here, they're mothers. They can be with their children, but they're giving up their Sundays literally to be here and give you guys this free information that a lot of people, will be charging for this right now. But we're going to wait 1 more minute and we're going to start. So those who are not watching, and watch this later on, I hope you do, take as much information. And those who are on, I want to say hello, hello, hello. And I'm going to leave this off with Melissa now.
Well, I actually need my meditator 4 because we're going to go straight into homework. So I hope you have your notebooks and your pens out. And darling, where is your meditator 4?
Okay, so we're going to start screen sharing.
Okay. Maybe you should just teach me.
Right there, screen share, desktop.
See, guys, this is a learning process for all of us.
Okay. That's right. And then we'll wait and then go here.
Here?
No. Just right here, like just touch it. Okay, minus. Just minus with the green. Perfect. And then your meditator right there.
Right here.
No, this one.
Okie dokie.
Oh, and take the grids, because a lot of them couldn't see last time.
I remember, yes.
Okay. I'm gonna go on now.
So how did we take off the grids the last time?
F8, properties. Right here. You're gonna go to, let me see if I can do it here with her mouse.
Yeah, I was trying. Her mouse is killing me. Your mouse is killing me.
Properties.
None.
Perfect. All right, guys. So hopefully you guys can see this.
Okay, guys, so let's just get straight into it. Last week, the homework, I asked you really for 3 questions, and then I asked you to place some demo trades that I'm sure Kim already checked as the homework.
Yes, I did.
But we asked you, the first thing I asked you was how to identify a reversal, right? And so this is your GP, your GPB USD monthly chart, okay? So as you can see, the market was, going up on an uptrend. This is the monthly chart, okay? And I did zoom in for you guys so you guys could see it. But what happened here, you have 2 dojis right here. So that's a very clear sign of reversal. Okay, sorry. These are two clear signs of reversal that you have here. You have two dojis, okay, and you also have your hanging man. So look at exactly what just happened here. Follow my mouse. It literally went down. You had a nice reversal. Now this is a monthly chart, like I said, so, and it's zoomed in, so it's gonna look, you know, not like such a huge thing, but if you break it down, it's gonna look, you're gonna see it in the chart. I just want you to look long-term wise. This was a sign of reversal, okay? And then what happened here, it tried to push up, but it just kind of consolidated for a while. This is just a really long time. I just want you guys to see exactly what it is that I'm talking about. It doesn't matter if it's a monthly chart, a weekly chart, a day chart, an hour chart. I just wanted you guys to get a good, clear view of what a reversal was, okay? So that was simply that. Okay, what else? What can I say about a reversal? Just so that you guys can take notes on it, so you guys have, you know, clear indications in your head when you're studying your charts to identify a reversal. A reversal can occur at any time, okay? So that's something to write down. And it's a reversal is long-term movement, okay? So like, as I showed you, perfect. So as what I'm saying, why I'm on a monthly chart, every candlestick represents a month. So that's 1, 2, 3, 4, 5, 6, 7 months, okay, that the GPB USD was on a downtrend, okay? It reversed from being up above at your 2.0 something
296.
okay, I'm gonna call it in between because I really can't see about. It was way up here and it dropped way down here.
We can do the pip count.
Oh yes, you can.
Right here, the cross.
Okay, so
and then you hold on from where you wanted to start.
It dropped. Come here, Kim, because I can't see.
Okay.
That little vertical scale word.
Wow, that's a huge drop.
Am I reading it right?
7,000. Yep, 7,000.
7,700.
Yep, no, because we're gonna take the fifth number out.
Right.
So it dropped 7,020 pips.
7,020 pips. That's amazing. Like, that's an amazing
Oh my God.
drop.
I couldn't even calculate that.
7,000. I think it blew a little bit of both of our expectations there.
Yep.
But I just wanted you guys to see what a clear sign of reversal was. And like I said, it's a long-term price movement. Okay. And for this, if you trade, if you're a fundamental trader, and we're going to get into that a little bit later, the fundamentals do change when you're looking at a chart and you're looking for a reversal. Whereas into a retracement, which is what we're going to get into next, the fundamentals don't change. Okay. But we're going to cover that next with retracements. Also, what I want you to take note of, that in a reversal, an uptrend, right? It has very little, the buyers have very little interest, right? So that forces the price to fall lower than what it is. And in a downtrend, the sellers have very little interest, okay? So that doesn't force the price to go any higher, if that makes sense. And I think as you're studying and as you're taking in what I'm saying and you begin to look for reversals while you're studying your charts, you're going to understand what that means, okay? You're going to see it in the chart, okay? So next, we're going to just go into what a retracement is. And this was not my chart. And neither was this. Okay, here we go. And let's just take out, where do we go into properties?
Charts.
Charts.
I think.
Property. Take out the grid for you guys. Okay. Okay, so here, what I wanted to show you guys, and I hope I left it in the right. No, I don't know if it moved. Does it move all of yours?
Yeah, so you just gotta use the red to go back to where you wanted the retracement to be by.
Which red?
That one right there.
This one?
Mm-hmm.
No.
So
I don't remember in what chart I put it in. Crap.
So we're gonna. I believe it was the huge candlestick that you had it under.
No, because that's at the very beginning at the week. No. Oh, I'm so upset. I had a very nice retracement candle. And I should have written down what. No.
And it wasn't at the end?
No, it wasn't. Why is it not even moving it?
Because you're 96.
Huh?
The year.
Oh, so maybe it was the other way that I needed to move it.
And then that one's already at the end.
Crap. Sorry, guys. Bear with me a second.
But that's where it stood at when you closed out. It's that same candle.
Well, we can use this as a sign of retracement. Okay. You see how the market is going just basically kind of up and down. It's kind of ranging, and then it has a nice big spike up, right? It has a nice big spike up here. And then what does it do? It drops down a little bit, but it basically starts going up again. Okay. And you could actually, stupid mouse.
That's at the end already. That's one.
Why can't I move this now?
It's click. Once you click, you see the red dot. Click it again. No. You want to move the retracement?
Yeah.
Click it again. Again. And you see the red dot. Let me see if I can do it for you.
I want you to move it somewhere over here. Now, not only do I not like the mouse and the computer, this is going to be, no, I don't know.
Okay.
I mean, just leave it there. This is also a sign. This is a nice candle to show a sign of retracement. Okay, so you see it drops down and continues to go down a little bit, but shoots back up and it begins to consolidate again. And that's what it's doing pretty much. If you just take a look, it just ranges up and down and up and up and down, and has its spike ups and its drops, but it's just basically in a ranging pattern. So here, if you would have added a support and resistance line, it definitely broke. It would have broken support and resistance. And this is your Euro USD on a daily. But I just want to see if I can just quickly find my original candle. Ha ha ha. I'm very happy now, guys. Okay. Right here. Oh!
It's this one here. Right here. Let it go. Push the arrow. Now just...
Okay. So here, right, guys. Here is a perfect sign of retracement. Okay? Because the market was way up here. Look, it's up. The market was up, up, up. But this candle now, you would have...
Oh. Where you want to go? This is the candlestick you were at.
Okay. So here you have this candle and you're thinking, oh my gosh, wow, like it's just this, it's going to be up, 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 up. But guess what happens? The market just stayed ranging. It didn't do much of anything. It didn't create a new support and resistance. It hit this high and basically that's where it was all the way until over here. Okay, that it actually spiked up and broke what would have been a new resistance. Okay, it didn't break it here. This would have given you this area here, this breakout candle here would have given you a new support and resistance you would have created, right? From what you've already learned. So then it just consolidated for a very, 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 very long time because you're on a 4-hour candle. So each one of these candlesticks represents 4 hours. So it wouldn't have made a new support and resistance to all the way over here. And that's actually from December. Okay, so we're talking what, December 2nd, around that area, all the way now until we're in February right now. So it's a pretty bit of a while, right? Notes that I want you to take on retracements, points to remember. Retracements usually happen after there's a big price movement. Okay, so you saw, wait, oh, this mouse will be the death of me. Okay, oh, forget it. This mouse is straight killing me right now, guys. Okay, but that's basically, but I don't even click these things.
There.
Okay, so you guys would see, if you look, if you're studying a chart, okay, you're gonna notice these big candles. I passed a bunch of them. These big candles, you're gonna look at them. They're big moves in the market, okay? And those are the things that you need to look out for, because that's usually when retracement happens. And retracement is good for short-term trading. I would definitely say that, so take note of that. And like I told you, the fundamentals, they don't change when you're trading a retracement, okay? When you see a retracement. Also, the difference here is when you're trading an uptrend, there's buying interest present, okay? Remember we said in a reversal, it's the opposite. There's no buying interest present. But here in a retracement, in an uptrend, there is buying interest present, and that makes the price go higher. And when it's on a downtrend, the sellers are interested and they definitely push the price down. Okay, and things that you can use to trade retracements, okay, Fibonacci levels. For those of you who have branched out on your own. Actually, no, I don't want to show them because I don't want them to start using it and they don't know how to use it yet. So just, I want you to write these down, because when you do learn them, you're going to say, oh, okay, well, I remember Melissa saying you could use Fibonacci levels to trade retracements, okay? You can also use pivot points, lower support, higher resistance, which we went through when I was describing, when it broke out, you would create a new support and resistance. And also trend lines. Those are all things you can use to trade retracements. Okay, and then we went and asked you what kind of breakouts there was. And it was charts, properties, none. Okay. Okay, so I asked you what type of breakouts are there. There are actually three specific breakouts, right? But I want to only really go through two today with you, and that's the continuation breakout and the reversal breakout. Okay, so this is what I would call a continuation breakout. I am on the USD JPY on the weekly chart. Okay, so each candlestick represents a week in time in the market, right? So here is just a nice candle to show you guys what a continuation breakout would look like, okay? So this big ass candlestick would be is a perfect example of a continuation breakout. And the way you identify the type of breakout, it helps you when you're able to identify, should I say, the type of breakout that you're looking at. It's going to really help you understand and get a better picture of what the market is going to do, what the market looks like generally, okay? Also, when you're trading your breakouts, you really need to, as a little hint, is not trade the first breakout, because usually the first breakout is a fake out. Okay, so that's just a little tip for you guys. But also breakouts are very significant, right? Because it's a big movement. in what we call supply and demand, which I think Kim is going to get into a little bit later. Yes?
Yeah.
Okay, because I know some people have been asking what supply and demand are. So she's going to get into it, but it basically makes a big change in what is supply and demand in the currency that you're trading. Okay, and normally what happens after a continuation breakout is consolidation. Okay, and you'll see it right here very clearly. The market just ranges. The market just ranges right here, and this is your market consolidating. But then what happens? The market continues to go up. The market continues to go up where it was originally headed prior to your breakout. Okay, so I hope that makes sense. In a continuation breakout, after your breakout, you're gonna see consolidation, which is a ranging market, but the market, okay, so basically the traders think that if the market was on an uptrend prior to the breakout candle, right, they want to continue going on an uptrend. Okay, so that's kind of what happened here. The sellers tried to push price down, but the buyers pushed price up. They had a little bit of battle, a little bit of consolidation, you could say here as well, but the buyers are continuing to push up. Slowly but surely, they are continuing to push up. Okay, so that's a continuation breakout. And then I didn't have time to set up I'm looking for properties, yeah, to set up the other breakout, but we're gonna do it together. Okay, so now we're gonna look for,
this is USD CAD, guys.
Yes, USD CAD on an hourly chart, 1 hour chart. So now we're gonna look out for a reversal breakout, right? And a reversal breakout it starts exactly like a continuation breakout. You're gonna see a big candle to break out. And I just wanna give you guys a perfect example. Oh, maybe too big. Yes, too big. Okay, a reversal. Like I said, it starts like the continuation. You have one breakout candle, right? You have your moment of consolidation, but then the market actually does reverse. So if it was on an uptrend, it will now go on a downtrend. Okay, and I want to give you guys a perfect example. Okay. I'm gonna find you guys a reversal breakout. Bear with me.
Thank you, Monty C. He said, great job, ladies.
Aw, thank you.
We appreciate it.
All right, let me look at just another time frame because this is killing me slowly. Or look at...
Work that Mac. That's right, Jennifer.
I hate this Mac. I hate it. I'm not trying to place an order as of yet. Oh, wow. How do you do? Crap. I'm used to one mouse and now you give me another.
That's right. We're using a backup mouse, guys. My mouse.
How do I open this chart? How do I open
charged
this?
right now? My mouse is charging right now. And thank God for Elba bringing her other Mac. And that's her Mac over there, Elba's. And we're using her backup mouse because my mouse died. So you want to open another currency pair?
Yeah,
which one?
This one.
So right click it.
I tried that.
Oh, with this mouse. You know what? Elba, hold this 1 second right here. Sorry, guys. We're new to Mac, so just I'm gonna see.
And now I'm gonna die. I'm gonna die in the middle of our webinar.
Okay, let's see if this works. All right. This one, AUD tag?
Yes.
Chart window?
Woo!
Okay.
Now we're talking. Now we're back to our regular mouse, guys. That makes me so happy. Okay, this, I'm not going to even tell you guys what I'm doing, because if you don't know what I'm doing by now, you really need to go back into all of our videos and watch them, okay? Because I should not have to tell you what I was doing right now. Okay, so now I'm looking for a reversal breakout. This is the AUD CAD. I'm on the 1 hour chart, and I'm just going to skim by because I want to see if I can find you guys a nice reversal candle so you have an image of what it's going to look like. Okay.
And for those of you that are on our live feed, if you guys want to see a better viewing than what we have right now, because obviously you're watching from my Facebook Live, you would want to click on my YouTube link, and that's our YouTube channel for the Forexchicks. And you can find that on either of our pages, and you can just click on it, and you can actually see Melissa screen sharing with you guys. So it's going to be, you guys going to get a way better view than me holding my phone. I do the Facebook Live for questions until we get the chat enabled, so people who are actually watching on our YouTube can start stopping us and asking us questions.
Okay, so it's weird because one mouse works better to move. Yeah. But the other mouse works better for clicking.
So she's looking for a reversal right now for you guys. So you guys can visualize what it is that we want to explain to you.
But then I feel like it moves too fast. It's too big for me. Makes it double hard to see. Okay. Here we go.
My God, look at that engulfing camera. I know.
But okay, we're gonna use this as a reversal. Why? Because as you guys can see, the market was on the downside. Okay, the market here was on the downside for, you know, quite some time. We're on a 15-minute chart. So every candlestick represents 15 minutes, okay? So right here, was this the one I just had?
Mm-hmm.
No. I feel like this mouse has a mind of its own because that was not.
Oh, that one right here.
I don't even think that was it. No, it was this one.
Oh my God. Okay, so yeah, so leave it there. Take off that so it doesn't move.
Okay, so I'm not going to go back because it's going to cause a little bit of drama. But just so you see, the market was on a downtrend, right? Then what you have here is a perfect example of a reversal breakout. And if you've been studying the chart every 15 minutes, you have plenty of signs of reversal. Plenty of signs of reversal going on right here. Okay, this is a 15-minute chart. So you have a perfect reversal breakout, right? Because now the market before it was on a downtrend, but you know what? Buyers are saying, screw this, let's push price up. So they created a new support and resistance, right? They created a new supply and demand. And the market was ranging up for quite some time. And it kept going up, and guess what happened? Buyers got a little bit tired, and the market went down a little bit, okay? And you had, ooh, stop moving. Where's this mouse? Here, okay. Here, up here, if you just look while it consolidates a little bit, you have signs of reversals. You have signs of reversals, guys. Okay. Oh, was it there?
Mm-hmm.
Oh, man.
Yeah, it was there.
It was there, right? Okay, so here you guys, you have perfect head and shoulders. Okay, and the market pushed down for a little bit. Okay, then it consolidated for a while as the buyers tried to push it back up. Buyers did succeed for a little bit, pushed the price up. Sellers succeeded a little bit. They had a little bit of a war going on. Okay, every 15 minutes. So if you're studying this currency pair on this time chart, and you were studying and you were catching these signs and you had your trend lines up and your support and resistance, you're making money. You're going into short-term trades and you're making money. Okay? But again, that's if you can actually piece together everything that we've taught you and what works for you, whether, you know, the trend lines, whatever it is, indicators, whatever it is that you're using that helps you read your chart and helps you put the story together. Once you can do that, once you've mastered that, reading the chart is beyond easy, guys.
Question.
Yes.
We have a question from Jennifer.
Jennifer, okay.
Hey, Jen. Her question is, are W's and M formations 100% sign of going up or going down, or could they be a fake out?
Anything could be a fake out. Anything could be a fake out. You do not.
Nothing's 100%.
Nothing's 100%.
Okay.
Like she said, nothing is 100%. You could see a W forming and you're like, and I could be 100% sure that it's going to go up, but just because it formed a W is not a sign for me to get in a trade. That's a sign for me to keep an eye on what the market is doing and look for the next two to three candlesticks and get that confirmation that the market is going to continue, in case of a W, to go up. In the case of an M, to go down. You always want to look for that confirmation. You always, whether you're using an indicator that we've taught you to use, or a trend line, support and resistance, whatever it is that you're using to read your chart, all those pieces put together, that's what's going to help give you a better confirmation. Nothing is 100% in trading. I could put in a trade to go, I could be, and I know Kim will tell you so many times, because there was like a period for like 3 weeks, I would say, that I was so freaking sure that the Euro USD, because that's my pair, I was so sure that the Euro USD, I think it was going to go up, I thought it was, right? So I thought I read the chart right, and you know, I got cocky and I placed an order for a buy. And for like 3 weeks, I must have been negative, what, like $600-700?
That's right.
We were freaking out. We were like, oh my God. I was like, I can't lose all this money. I mean, sure enough, the market did what it was going to do. And I was able to place another trade and catch pips and make money, but I also got myself out of them. I never closed more negative than, I think I fumbled and then said that all retarded, right? I've never closed out a trade with more than negative 50. Ever. I refuse to lose anything more than $50 freaking dollars. Like, call me frugal, call me cheap, call me a Jew, call me whatever you want. I do not care. Okay. No, and I'm not insulting anybody, because Jews manage their money very, very, very well. Okay. But no, I'm just saying, if I do not like to lose anything more than $50. Okay. So in that sense, you can.
I'm hyperventilating over $20.
You see what I mean?
Hyperventilate over $20. The second I see it go to $17, I'm already hyperventilating.
That's right.
You see, guys? So for me, that's that. Like, I do not want to lose anything more than $50. But guess what? I've closed trades out that I was once negative. I've been negative up to almost $1,000 in my account. And guess what? I've never closed. I've closed out a trade where I was negative $800. I've closed it out at $14.50. Why? Well, because I had the money in my account to ride the wave of going up and down and closing out at a level where I felt comfortable closing out, because I'm not going to lose all that money. No way in hell. But I knew, I was confident that the market was at some point going to do what I said it was going to do. And sure enough, it did. It may not have been at the moment that I thought it was going to do it. Okay. But it did. Okay. But that for me is a learning curve, because when I thought the market was going to go up and it did, and I have to see, okay, this is why I thought it was going to go up. But as I'm looking for the second time and I'm looking more detailedly, I'm saying, oh shit, here's a clear sign that no, it's going to reverse. It's not going to do that yet. So you have to be aware of your chart. You have to be aware of all of its movements and really study and examine it before you go ahead and jump in and place the trade just because you see a W or just because you see an M. That's a stupid move. That's a rookie move. And those are all the things that we are here teaching you and trying to prevent. Okay, these are mistakes that we've already made that we don't want you guys to make. Okay,
All right.
So I hope that answers your question, Jennifer.
It ended in that video. Okay, so
Okay,
are
guys.
you done? Or the chart?
Hold on, I just want to go. We went over that.
Isn't it supposed
So
to be an hour?
no, that.
Wow, more
outside.
than 1,000 people viewed in our Facebook Live.
Aw, guys, do you hear that? That's absolutely so amazing.
1,000.
Over 1,000
Awesome.
viewers on our Facebook Live. Honestly, that's so amazing. That feels so good to hear on
Well,
Super
Super
Bowl
Bowl.
Sunday.
Wow.
That feels so good to hear. So I just want to take a quick moment to say thank you to all of you guys that do share our feed and are on here every Sunday religiously, and and you're taking notes and you're learning and you're studying and you're applying what you're learning to placing a trade and to reading your charts. Okay, and I love when I have students that email me and send me a screenshot of money that they made and on a trend line or something that helped them read their chart. It feels really good, and I know Kim gets that all the time because she's constantly sending me screenshots of all the stuff that you guys send us. So it does mean so much to us. So I just really want to say thank you. Okay, but now we're gonna go straight back into it. Okay, there's another type of breakout that I don't want to get into today because I don't want to confuse you guys. Okay, and that's a false breakout. And I think the name kind of speaks for itself, right? So just to give you a little bit.
If anything more to go on the screen? Or
No.
So we're going to stop screen sharing because they're going to want to see you.
Aww.
Okay, so we're going to stop screen sharing. All right. All right, guys.
All right, guys. So hi. Okay, so false breakout. I don't want to go and show you what it looks like on the chart, but I think really the name speaks for itself, and it's going to be part of your homework. So I'm not going to go into it in depth. We will go over it next week. What else did I tell you guys to do? Oh, okay. I asked you guys how to fade a breakout. You fade a breakout, and basically when you're fading a breakout, you're trading a false breakout, because what you're doing is, let's say on a chart, you have a nice red huge ass candle, right? And you're thinking that's a breakout. That's right. That's your breakout, right? That's a breakout candle. But guess what happened? It went from going on an uptrend to have that one candle just engulfed and shot down, but then it continued up, right? It continued back on its uptrend. It was a fake out, right? So in order for you to trade that, you would trade opposite. So instead, you see that it's going down, but you place your trade to go buy because you believe that candle, right? Because it didn't create a new support and resistance. Okay, and we'll go over that next week. I'll have it nice and set up for you guys in the charts, but that's exactly what you're doing. You're trading against what the market is doing because you know it's going to immediately realign in the way that it was going. Okay, and I think that was it homework wise, guys. Yeah. I believe the last piece of the homework was for you guys to place your demo trades. Okay, so I'm sure Kim went over those and
I want to say Anita.
She's done.
Anita did an amazing job on her homework assignments. So Anita, she's watching us.
Anita, that makes me so
she did the best.
Very, very happy. And I promise you guys, if I wasn't a mom, I would be up checking everybody's homework, but literally by like 9 o'clock, my head is in my dinner plate. Like I'm just exhausted. Okay, but Kim does tell me what an amazing job you guys do, and she wanted to shout out Anita because Anita, you did such a great job, and that really makes me so happy to hear. And I'm actually gonna ask her to send me your homework so I can look at it because I want to see it for myself. But
amazing on everything.
I appreciate that you guys do take your homework so seriously, because if you're anything like me, and I'm very organized,
yes, you are.
Opposite of Kim, right?
Right.
But no, seriously, guys, I'm like super like weird, like organized, like everything, every piece of paper that could have to do with my life is compartmentalized, right? I have like a binder or a folder or something for everything. I mean, absolutely anything and everything you can think of, I have some type of storage for. Okay, so when I do projects like these that I'm taking notes and all that stuff, you can ask the girls. I have a huge Forex binder that I keep at home, and it has just like so many different lessons and things that I've learned and graphs and examples, and that's stuff that I constantly go over because I'm constantly, it's good to refresh and go back to the basics and not just say, oh, I learned a new strategy and this is what I'm going to rely on. This is going to be my new bread and butter. This is what's going to help me make all the money in trading. When no, it's like Alba said last week, it's very, very, very important to constantly study and up your game and constantly go back to your basics and just refresh everything that you've learned so that you can put it together. And it's going to make you a better trader, guys. I promise you, it's going to make you a better trader. You're going to see yourself calling better chart. You're going to see yourself calling what the market is going to do. Okay, you're going to be able to do that with whatever pair you pick. I know for Kim and Elba and I can look at any currency pair and just study it for a few minutes, and I can give you a pretty good prediction on what I think the market is going to do. And, you know, a lot of the times I'm right because I'm constantly just studying and going through everything and looking at all the signs and all the little details, all the reversals, setting up my trend lines, my support, my channels. I'm looking at everything, my higher highs, my higher lows, anything that you use, your indicators, whichever indicator you use, your MACD, your ADX, whatever it is that you use, the simple moving average, the exponential, whatever it is that you use. When you tie all of that together, because I hope that you're not just using one as your indicator to trade, I hope that you're taking bits and pieces of what we've taught you and things to read the market, like your trend lines and all of that, and you put it together and you get comfortable. You're gonna find what works for you, right? And I think I've said that to you guys before. You're gonna find what works for you best and what makes it easier for you to look at the market and make your predictions and place accurate trades, because that's our goal for you guys. We want you guys to place accurate trades so that you can make money in the market, right? That's our goal. So I hope that you guys do that. You know, keep these notes, put them somewhere, a folder, and just constantly read through them. Just skim through them. Just keep that refreshed in your mind. Okay, your basics, everything is important. You just have to learn to put it all together in a way that works best for you. Because the way you trade may not be the way that I trade. The way Kim trades may not be the way that I trade. But Alba may not trade the way I trade. What works for one doesn't work for all, right? But that's why we teach you a bunch of different things to be able to read the market. So I keep the notes and constantly refresh yourself, guys, okay? So I'm done. I will be assigning homework later. But now I think Alba is going to come up and give you guys a little bit more knowledge.
All right, Alba's up, guys. You guys want to stay on this right now. Melissa did an amazing job. Thank you. And Alba is just going to do just as great, guys. So please take your notes, notebooks, cameras, electronics, and continue watching this. And this is, you know.
Hey guys, how you doing?
Woo!
Thank you all for joining us. I know everybody wants to watch the Super Bowl. Believe you me, I love the Super Bowl. I actually like to bet on the Super Bowl, but this year I couldn't do it because I dedicated myself to this. And so this is where I am. I'm away from my children. I had to make sure my oldest daughter put her to bed on time so that I'm here doing this with you guys. All right, so let's get right into it.
Take notes, guys. Woo! So we're going to go to screen share.
So, right here.
Screen share, yep. Desktop. Start screen sharing. Okay, wait for that to go down, and then we're gonna click here. No, up here, right here, just anywhere over here, and then minus with the green. That's right, and then you're gonna hit the MetaTrader. Okay, and then you just pick whatever currency you want. You can do this one or whatever one you want to work on. And then whatever time
This is crazy because I understand my mouse.
So you're gonna use your mouse?
Yeah, let me use mine.
All right, guys.
All right, so while she's doing that, I want to go over some things. The last time I was on, you know, I told you guys, stick to the basics. Remember the basics. Remember the basics. Why? I'm explaining again. If you don't know the basics, right, how are you going to move on to all these other indicators that goes within to trading? So you have to know your candles, know your support and resistance, your highs and lows, and your trend lines, right? So let me get right into it. Last week I spoke to you guys about the high. I got into a little bit about the high and lows, and today I want to get into the support and resistance. All right, and I know a lot of you probably know your support resistance, and there's a lot of you that think you know the support resistance.
That's right.
Because I'm going to tell you, I thought I knew. And I did not know. It was a little more than that. I thought that when someone explained it to me one time, I thought I had it. I was able to place a trade. And no, that's not the case. So what I want to talk to you guys about is first this. All right, you've got people that trade on the 15 minutes, 30 minutes, 1 hour, 4 hour daily, right? I like to do the 4 hour, right? So here's the thing. If you like to trade on the 15 minutes, right, you want to go to the 30 minute. You want to study the 30-minute chart, all right? Because if you do the 1 hour, you study on the 4 hour, and you start from there. I like to do the 4 hours, so I start everything from the daily chart. Okay, what is this? This is the AUD CAD?
Yeah.
Right, so we can keep it here. I'm going to show you guys some things.
Just giving you some nuggets, guys. So I hope you guys.
All right, so I'm going to go on my daily chart. All right, here it is here. All right, so as you guys can see, you see these lines going up and down, up and down, up and down, and it kind of shoots up here, all right? For me personally, because there's so many, you see all of these candles going like, it's kind of like wiggly like that. I used to be confused as to where to put my support and resistance. A lot of people have a lot of lines on their charts. If you have a lot of lines on your charts, then it is wrong. You should not have 50 lines really, really close to each other, you know, using that to identify your support and resistance, because it's not so. So what I do is, all right, this makes it so much easier. You go to your line chart. If you go to your line chart, you're gonna see it like this. The first time I saw the line chart, I said, "What the hell am I reading?" Right? People don't use this to trade, right? But it's useful. You can use it to identify your support and resistance zones, right? So here, I'm gonna start building it out. Okay.
That's right.
Now, keep in mind that everybody uses a different system. You need to find the system that works best for you. I might have a support and resistance line that you might not agree with, and it might not work for you, you know? But as you keep doing it continuously, you know, and you study the charts, you'll be able to get it down. All right, so let's start. All right, we're gonna start one here at the bottom, right? Because that's the lowest. Right? Some people might even put it here. Right? Because they say all you need is 3 touches. It's 1, 2, 3. This is kind of like a fake out right here, but it touches here, here, right? Some people might even put it here, and there, right there, you've got 3 touches. I would probably put it around here. Why? Because it kind of, I'm gonna put another one here. Why? Because if you can see here, right, it kind of touches, and it breaks out. Or let me see, wait a minute. It's actually probably, oh, I can't move this crap, hold on.
I'm telling you, her computer is possessed.
Okay, hold on.
Hates regular people.
All right, if you put it here, it's got 1, 2, 3 touches even here. it's close, right? And then if you go along, it kind of remember, this is support down here where you see my mouse. This is support, this is resistance. What was once resistance becomes support. So it kind of right here. This is not really a good one. Hold on. This is not really the best one I can show you. This is not really the best one I can show you, but let me see if I move it down here. It's not the best one, but I'm hoping that you guys can more or less get a picture of it. If you see my mouse, it kind of like stays here and then it breaks out. I'm gonna put another one here. So the reason why I like the line chart is because it only shows the closings. That's what you're seeing. Every peak is the closing, the closing, the closing, the closing, the closing. So if you see here, it kind of stays here, right? You got your resistance, your support. It kind of stays, it breaks it, but it doesn't really break it down here, you know? And then moving here, it now makes a new resistance and support line, and then eventually it breaks out, right? So if you start with your line chart, it'll help you better identify where your support and resistance lies. I hope that makes sense to you guys.
I hope you guys are taking notes.
This is good stuff,
because although this is something you
I really like the line chart, but here's the thing. To perfection it's never going to be 100% because again, you have the charts goes up and sometimes it looks like it's going to hit, but it doesn't really hit. It kind of misses it. But as long as it stays in the zone, like here, it stays in the zone. You know, you've got people that trade within the zone, right? It trades within the zone. If you would have traded within the zone, you still you still would have gotten your pips. And same here because it's staying within the zone. So that's what I want to explain to you guys. And then of course, here's another one here. As you can see, you got the and it's here, and it looks like it might stay in the zone here. You see here, and it's kind of in the zone, you know, and it looks to me it's gonna kind of stay in this zone right here. All right, so if it stays, unless it breaks, you know, like it did here, then you know, because that's what the charts do. The charts, the market, it repeats itself over and over and over again. That's what it does. You see here, what was once resistance becomes support, and then it happens again. So that's what I really, so if I try and flip back to my candlestick, I hope you guys, can you see that? Can you see that there?
Wow.
You see that? You see how it kind of comes through here? Even though it kind of, you know, here, it's still kind of in the zone. You know what I mean? It doesn't go in, it doesn't stay in here. You see, same here. You know, and over here, it breaks through. How do you know it's gonna break through? There's kind of a way that I'm doing that kind of lets me, indicates to me that it's going to break through, and I kind of like use a box. So if I made a box from, let's see if I could, where do I get my shapes? Shapes tools. I need a shape. How do I make a square on this damn thing? Nobody knows.
Hey, I'm a PC user.
Insert.
Let me see.
Let's see what insert.
Here, shapes.
Rectangle.
Here.
Perfect.
So if I were to say here, from up here, and I did this, right? There goes your zone right here. That's your zone. See this line right here, this resistance line right here, I would call it, because you have something as you have a major support and resistance line, and you have your minor support and resistance line. This line I have going right through the middle, that's my minor, right? So this box here is my major. So here it is here. Up on top, if you see there's like this engulfing, candlesticks go all the way up, but if you notice, it hits my box. It kind of hits my box. If it hits my box quite a few times, it gives me an indication that that's going to continue to trend up. All right, but that's something I would get into deeper further. But that's pretty much, create your zones. Create your zones. You know, that's pretty much it with supported resistance. You know, if you guys really want to get it down pat, you know, if you're going to use the demo for something, use it to test yourself. Use it, you know, wherever you think, you know, even if you're doubting yourself, just put it down. Put in a trade in your demo where you think it's going to hit. Put in your stop loss. Put in your take profit. If it hits or doesn't hit, whatever happens, write down where you should have put it. Right? And continue. Take notes. Make a record of what it is that you do. Take a look at the chart. Why didn't it hit where you thought it was going to hit? You know, was there a reversal candle that you missed? Or there's sometimes there are reversal candles that takes three or four candles for you to know that it's a reversal. You know what I mean? So there are different ways, but like I always say, stick to the basics, because if you got your basics, you're definitely on your way to becoming a successful trader. All right, so that's that. I hope you guys understood what I said. If you guys have any questions, again, you know, feel free to ask. But I don't know. I hope I put it in a way where you all can understand. Because when it was said to me, I thought I understood it, and I didn't. I needed to be spoken to me in my language, where I can understand it, or I can, and I.
Guys, woo! Oh, tell them what happened.
Sorry, guys. So while I was explaining to you what I was explaining to you, Kimberly here was, I don't know what she was adjusting, but accidentally she touched the power button. Everything went down.
Are we good now? Yeah, we're good.
All right. So basically, that's what I wanted to show you guys. That's what I wanted to teach you guys. Oh, I'm going to be the one girl out of the group that's going to always tell you basics. You know, stick to your basics. You know, if you're familiar with a couple of candlesticks, if you want to use that, use it. But there are many reversal patterns. I encourage you to get to know them all. Get to know all of the reversal patterns. It takes time. You know, this is not a get rich quick scheme. You have to be serious. You have to be consistent, and you have to want it. You have to really want it. So if you're reading any books, read it again, because there's probably something you missed or whatever. Never read a book once. Read it more than once. Take your notes. You know, by now you should have a full notebook going on your second notebook. I lost 2 notebooks and started again from scratch, because it doesn't hurt to rewrite everything and refresh.
We have a question,
you know what I mean?
From Mr. Hickmont. I hope I'm saying your name correctly. I didn't want to chop up your first name. But yes, Kim is about to go over supply and demand zones.
All right, so that's it. Let me get out of this. All right, so thank you guys so much for being with me. I hope you learned a little something, or if you already know it, I hope it was a pretty good recap on support and resistance zone. Get to studying, get to practicing, and practicing is the only thing that's gonna make you perfect. It's like driving a car. When you drive a car, they tell you have to look at your rear mirror, your side mirror, and the other mirror. And you know, and at first it's difficult to do all at once. But as you practice, you become good at it. And it's the same thing with everything you do, including this Forex. All right. So thank you guys for joining me. And I don't know, let's keep pushing. Kim, let's go.
All right, guys. So let's move this. All right, guys. How are you? How are you? Thank you guys for staying on. Like we all said, Elba, Melissa did a fantastic job. Truly, truly love these Forexchicks. I mean, they're killing the game. You know, being a woman in this industry, when you have 98.2% that are male traders, and we're coming up there. And you know what I tell successful traders, that the only thing that you have on me is time. That's it. That's the only thing you have on us is time. Once we get there, trust me, we're just going to be at the same level, if not maybe even better, because honestly, our goal is to be the #1 income earner in Forex trading, not in anything else, but in income trading when it comes to Forex. That's our goal as us ladies. So we're here to empower women and men. The Forexchicks is not only about empowering women. Yes, we want to empower women, but it's also for men too. We want to really help both ends of the spectrums to become better traders and understand what it is that we're doing. So today we're going to be over something that we've never covered. And let me get my eraser. And I had the privilege of learning something by a very, very, very successful Forex trader. He's been having more than a decade trading. And, you know, we've been talking and, you know, I asked him, what can I give the students, to you guys right now that are on, that is really amazing, something that's really not talked about, and it's called currency rings. So for those of you who've never heard about currency rings, what is a currency ring? What is this? Take your notebook again, because it should be out already. And those for you on my Facebook Live, same thing. Take out your notebooks, pens, electronics, whatever, and start writing this down. Now, currency rings is really it's a proper way to hedge yourself in your trading portfolio. That's basically what it is. It's going to really enhance your portfolio. And when it comes to trading, so what trading is currency rings is taking 3 currency pairs, right? It's taking 3 currency pairs to trade them against each other, and that forms a ring, right? A ring is round, right? We understand that. So you're going to be having 3 currency pairs that you're trading against one another, okay? And this is to benefit you. This is what it is. So what happens is when you're trading a currency ring, okay, together, you should form a near perfect hedge. Okay, and I want to go over what does that mean, a near perfect hedge. All right, guys, so to understand the value of currency pairs is really important for your platform, for yourself, and making great decisions on the currency pairs you're going to pick when you're picking 3 currency pairs all at once to trade, right? And that's going to really help you with your personal account, and utilizing these rings is going to help you maximize the most profits you really can make. And not until I was introduced to currency rings did I understand how beneficial and how much money you can really make in this. But, you know, a lot of people don't give you this type of information because, you know, it's tricky in the beginning. You're not going to understand everything. And just like me, I'm not an expert. I still need practice in currency rings, but I'm going to, you know, master it over time. And I really felt like, you know, why not give it to you guys today? Why not give you this currency rings and explain how it is and how you can be consistent in trading with a lot of, you know, profits if you downpack your currency ring, guys. So it's going to end. How long? How long we have? All right, 3 minutes. All right. Now, what I'm going to go over is when you do a currency ring, I'm going to give you a pair right now, right? You're going to go get 3 currencies, right? You're going to have 2 buys, 1 sell, or 2 sells or 1 buy, right? So vice versa. So you can have 2 sells, 1 buy, or 2 buys or 1 sell. It's going to be one or the other, guys, okay? So let me show you. So we're going to take, let me move my chair. This is pretty cool, okay? So you're going to take the Euro, USD. Then you're going to take the USD CAD. This is like multiplication. What do you see here? Okay. So what's going to happen when you do division, right? you cancel out these two numbers, right? We're gonna just pretend. So what's gonna happen here, you're gonna have a buy here, and a sell on your third pair. Now it could be the other way around. I'm just giving you an example. Remember, you're gonna decide if it's gonna be a buy or a sell according to what the market is at currently, all right? So we're just right now giving you examples of what this is. Now, what's gonna happen is you're gonna cross out the USDs, right? Just like in cross multiplication, right? And you're gonna have what's left, the Euro and CAD. That is what's going to tell you what is going to be your third pair you're trading. So this is going to be Euro CAD. This is going to be your third currency. And this is going to form Euro, USD. Okay. Then you're going to have USD CAD. And then on this end, you're going to have Euro CAD, sell, buy, and buy here. Okay. This is when you get to a level of knowing how to hedge your accounts with currency range, because if you know where the market is going and you know how certain currency pairs, if one's going up, you know the other one's going to go down. Well, you could use that to your leverage and trade 3 currency at once and maximize your profits. When I was shown this, I was like, wow, another way I can make more money. So I'm going to give you another example of currency rings.
You got 10 seconds.
10 seconds?
Yeah.
All right, guys. So those of you on my Facebook Live, I'm going to be going over more examples of currency rings. So please get back on this now, right? So what it does is ends.
Yeah.
Okay. Okay, so then I'm going to do okay. I'm going to go back on here. Currency rings. Okay. So we have more examples. So Euro, CHF, JPY. Then you're going to have, so what do you guys see? The Euro with the Swiss. So we're going to use this as an example as sell, the third buy, okay? What happens here is CHF. What we're going to do, we're going to cross them down, and what's left is the Euro JPY, Euro Yen. And this right here is going to form a currency ring. Once you get it down packed on where the market is going and you trade these 3 currency, you guys are going to be in really big profits. And this is like forming a near perfect hedge. And a lot of brokers, onshore brokers, do not want you to learn how to hedge. Why? And I'm going to go over that in a second. Why brokers don't want you to know how to hedge? Well, they're not going to really make a lot of money off of you guys. You understand something. It's actually illegal to hedge, right? Why? Because what hedging is basically when one currency pair is going in the up. So say you go in as a buy, okay? And you're down 10 pips. Now you're going to go in as a sell, because if you were trading a standard lot and you're down 10 pips, you're down $100. Well, you don't want to have more of a further loss, right? You don't want to keep losing, right? You don't want to close out and just leave $100 loss. You want to maximize and prevent the further loss and gain some profit. So that's when hedging comes involved. And you would go in as a sell, right, to counteract the loss that you had as a buy because it didn't go in the direction that you thought it was. So what happens is you go in as a buy, you're losing $100. You go in as a sell to collect more pips so you can further reduce the amount of loss you would have had. So it is actually illegal to do that in the US, in the States. Now, when you do international brokerage account, like, offshore brokers, some people get away with it. but legally you're not allowed to, because what happens now, the brokers are not making the money that they would want, because now you understood something. Well, wait, if I can minimize my losses with hedging, well, guess what? If everyone did that, there's going to be a problem, right? A lot of people do not know how to hedge correctly, because it is a skill you must learn. But if you know how to use currency rings, right? If you use your currency ring and that was going against you, imagine what you can do if you knew how to hedge properly, how you can minimize losses, guys. So that is what I was going over for currency rings today, guys. It's something new. I don't want to go so in depth, because this is something that a lot of beginners wouldn't understand. How to properly, you know, execute a currency ring. So just remember, guys, a currency ring requires 3 pairs, okay? And I gave you the 3 currency pairs. And remember, you write them out here like this, and then on your 3rd currency pair, you're gonna trade against these 2 right here, and that's how you get your 3rd currency pair. So you can have 2 buys, 1 sell, 2 sells, and 1 buy, guys. It's all up to you. So, you know, this is really going to be good in your portfolio in trading. You're going to really, you know, understand how these elite traders are able to, you know, minimize and cap their losses by properly hedging. So I hope you guys understood what I went over today. And there's a lot of people wanted to know about supply and demand, right? So let me erase this. Okay, so supply and demand, right? So let's give it an example. Say demand. Demand is when people are buying, right, at a certain price. The demand for what they want for the currency pair is so high that it pushes the prices up, right? The market makers bring up the prices, right, when it comes to the demand. So what happens once it reaches too high, those buyers start selling out those currency pairs. So now the market makers got to bring back the price down, because the demand for it is not there anymore. So what happens is, while the market is going down, there's more supply for it because of the prices. And guess what? As people make the money as the prices were going up, now the sellers come in as the prices drop, and that's how they take their profit. So we're going to write it out here with supply and demand. I hope you guys understood it. I can even give you an example. It's like in real estate, right? You buy a house, the market is really good, right? There's a lot of buyers. And what happens when there's a lot of buyers? Now the homeowners can now increase the value of the houses. So if I was selling a house, right? A house number 1. This is for demand. Hey, house number 1 sold for 100K, right? House number 2 sold for 150K, because the demand for what these people want goes up higher. House number 3 reaches 175K. Now the people are saying, okay, now they can afford this. So what's going to happen is the demand for it's not there. So the supply is going to increase as less people are now buying these homes, because now they couldn't afford it. So what happens then? The market drops, and so does the value of the houses. This is like a form of way of explaining supply and demand. I'm gonna still go more and go talk about it more, but I hope you guys can understand my examples, because I like to simplify it. I don't want to go with all these technical words that they have for technical analysis when it comes to trading. I want to simplify it. I want to like Forex for dummies, right? Forex for math, Forex for real estate, Forex for nursing, right? When I went to nursing, I bought a Forex for nursing, like the dummy books, right? Whatever it's called. And it really helps when you simplify things, right? So remember, for supply and demand, the demand for the currency pair is there. And when it reaches a certain max where it's overpriced, now there's not a demand for it. So it goes back down. The market makers drive the prices down, the sellers, and that's when people start going in as to sell it. So it's a real cool way to trade. And I'm gonna go more in depth. Let me just erase this so this doesn't confuse you guys. Also, when you're trading supply and demand, you can use your Fibonacci retracement to go in. So let me go in here. Let me go right here. Now, the demand refers to how much quantity of the product is desired by the buyers. So it's like if I'm selling a MAC lipstick. So many girls want it, right? Oh my God, we all want them. What's that red lipstick?
Red.
Ruby red. How many ladies, you know, even gentlemen that bought ruby red? Hey, Valentine's is coming, right, guys? So, oh my God, I froze. Am I frozen on my computer now? I don't know what happened. Hope I'm not frozen on YouTube. But that's the demand, all right? It means the desire for the product is so high that the buyers go in, and the quantity of the amount is of the product, people willing to buy it at a certain price, okay? And the relationship between the price and the quantity demand, right, is known as the relationship. Am I on the YouTube? Okay, so supply represents how much the market can offer it, right? What can the supply do? How can this offer the currency pair that we're currently in, right? Well, the quantity of the supply refers to the amount of certain good producers that are there. And what that means, am I live?
You're alive, but
I froze, guys. Let me see why I froze. Hold on, guys. I froze on my YouTube channel. Oh, this is no good. How do I unfreeze myself? Hold on, guys. For those of you that can hear me, don't get off this. I'm not done. You want to know supply and demand. For those from my Facebook Live, hold on. I froze on my YouTube channel. Oh my God. I'm gonna call Verizon Files. I pay for the highest speed, 75/75, and if it's freezing on me, it's not giving me a 75/75.
I have the same problem at home.
So hold on. Let me screen share. Let me see if it stops. Screen share desktop. Okay, let me stop. Hold on, guys. Sorry, my YouTube froze, so I want to see what's going on over here. Hold on, guys. I'm so frozen.
well, this YouTube is on the link. I'm waiting till it catches up. I don't know if it will catch up.
Check on your YouTube. Hold on, guys. For those of you that can hear me, don't get off this. I'm not done. You want to know supply and demand. Guys, hold on. I'm like frozen over here. Don't get off. You guys want to know supply and demand? Don't get off this feed. I just froze for a second, so just give me a second. I'm trying to figure out. If it's freezing on me, it's not
This is too funny. This is deja vu.
Hold on, guys. I'm sorry. Those of you on my Facebook Live, I'm frozen and I don't like it. Hold on, guys. Sorry, my YouTube froze, so I want to see what's going on over here.
So as soon as it goes back there, it'll go back here.
Hold on.
I'm so frozen.
Sorry, guys. Hold on. Oh, let me. How do I shut off camera? There's like a. Hold on. Camera. Turn off.
What the heck? Did you? Oh my God!
What happened?
Somebody get on live from their thing.
Her phone done.
You guys want to know supply and demand? Don't get off this feed. I just froze for a second, so just give me a second.
Okay, can you go on the YouTube feed?
We need to get back on live now.
I'm going to do that right now. Hold on, guys. I'm trying to get back on. I'm like frozen over here. Like, oh my God. Like, what the hell is going on over here? I don't want to hang. I don't want to like close it out because I'm afraid that you guys won't see me.
No, but they can hear you.
They can hear me. Oh, but I wanted to show them. Oh, all right, let's go over more supply and demand. What we have here, hold on, guys.
They still can't see you.
I did. Oh, I did.
I want to be able to show you guys in the MetaTrader chart. Can they even see that right now?
Let's see. We want to show you in the MetaTrader 4 what supply and demand looks like. So please don't get off this. Just give me a chance to figure this out. Maybe I could screen share and you'll see that. Hold on. So let me screen share. Because this is really important, guys. And, you know, we're here trying to, you know, do the best that are, you know, of our ability. And I don't know why is my computer frozen. So hold on.
Hey guys, anybody that was on Kim's page, Kim's phone just went down with technical difficulties, so I'm getting on mine to continue our lesson here of the Forexchicks. This would be part 3. Not sure what's going on our YouTube feed. We're having some technical difficulties there as well. Shout out to Verizon Bios for this spectacular service that we're having during our damn webinar.
Okay, so
okay guys, so what I want you to do, Kim, is draw me
Fibonacci.
No. You can do it with Fibonacci. You can do your higher highs, your higher lows, and draw your support and resistance.
Okay.
Because I'm gonna show you, or actually, if the chart that Alba had up, where she drew all her support and resistance,
but
that would have been fine as well.
Right here.
What's the CAD? UD CAD.
We can even show, look, the Fibonacci right here.
Okay, guys, so just so you can see here, when you're purporting out your supply, when you're looking for the supply and demand, right? What you want to do is, okay, when you have your support and resistance up, so please point out where is your support and where is your resistance for your YouTube viewers.
Okay.
Which go for your first support and resistance line. Show them.
Okay. So this would be my first resistance right here. Okay. Then my second one would be here. Okay. And then let me move it up.
I would say if you could take these grids out because that may confuse them, take them out.
But let's show the number. The 50% right here. This is right here. This is the 50%.
This is your 50% line on your USD CAD, and we are on the weekly chart, okay? So she just drew her one support and resistance line, right? So basically, your support and your resistance, right? You're looking for your wholesale, which is technically what you want to be trading when you're looking to trade supply and demand. You want to trade at your wholesale level. And basically your wholesale level is, can you draw another supply and demand?
Yeah.
Because that's not a great one to show.
Mm-hmm. Hold on. Okay, so I hit here, boom, boom, hit, bounced off. So we could draw another trend line right here. Oh, wow. This is a perfect head and bottom bottom top right here where it bounced, boom, boom, and then it went up and it's been on the uptrend. This is the USD CAD on the weekly. So look at this.
Okay, guys. So what I want to show you, if we're just looking at this area, for example, right? If we're looking at this area as support and resistance, right? So we said demand is up here, right?
Right here.
And the supply is down here. So right in between, just to give you an idea, right in between this section right here, the middle part of it, right? In between these two lines, the middle. This section right here, that would be your wholesale. Okay, that would be your wholesale your wholesale area. And that's really what people trade when they're trading through supply and demand, through your support and resistance. That's something, honestly, you're looking to catch maybe 10, 15, 20 pips, if that, when you're trading supply and demand. Okay, that's what you're looking to grab. It's not, you're not going to grab an insane amount of pips at all. This is short-term, 10, 15, 20 pips max. Okay, because you're just looking to trade in that wholesale area. Okay, you would place an entry, a stop, and a take profit in between your support and resistance. Okay, so that's basically what you're doing. Kim is actually back live on her news feed. So I'm going to go ahead and let her continue on that one.
You ended it? All right, guys. For supply and demand, we were just drawing out. My phone died, so I apologize for that. My phone died, and not only did my phone die, my YouTube computer, my Mac, froze. So here I drew the Fibonacci retracement, right? And we're looking at the levels. You see the 100, you see the 61.8, 50, 38.2, 23.6, and 0, correct? Well, 50%, okay? We know price, it has to go above, right, and below, okay? So this will be considered, you want to buy price like a wholesale, right? You don't want to be, you don't want to buy, most people buy currency at retail prices, right? But for me, if I can sell, you know, put a buy stop or a sell stop or a buy limit or a sell limit, I look at what the 50% range is, right? Where is price always going back to, okay? Because remember, what bounces up must come back down. So I already explained for the demand, right? The demand for the currency, the USD CAD, for it to go up, okay? So if I was to place a pending order here, the demand for the US CAD was strong. It was going up and up and up right here. You see this long candlestick? It was going up. The demand for it, right, was really, really for the buyers. But what happened was the price got up so high that the demand for the USD CAD wasn't that strong. So the market makers said, okay, no one is buying no more at this price no more. So we have to bring it back down, right? So that's when the sellers come in, and you're going to come in as a sell for the US CAD and catch your pips here, right? For the supply and demand zones. So as you see here, the demand for the currency for the USD CAD, this is a weekly chart, guys. Look at this. This is US CAD on a weekly chart, right? So what happened was basically the demand for the US CAD, and this is going back in May 25th, 2008, all right? The demand for this, which each candlestick represents a week, it's pretty big, guys. So let's look. Let's see. Let's look at the pips. See how much money, my God. Let's look at this. Wow. Do you guys see that? Do you guys see those pips? You see the demand? You know how much money the buyers were in for this on a standard lot? Over close to 2,500 pips, guys, as a buy. This is pretty good, right? So the demand for the US CAD was strong. So what happens is that once it hits a certain price, the demand for the currency pair is not there. It's not strong. So the market makers have to say, okay, well, no one's buying at this price no more. right? So we're going to the supply. Now what happens, the demand for it is not as strong, so there's going to be more supply than demand. So this is a good entry for sellers now to come in, because now the price is going to go back down. And look what happened with supply and demand. It went up, right? You caught some pips here when it was dropping, but it's been on a downtrend all the way from 2009. Look at this. It's been on a downtrend from 2009 all the way to 2012, guys. So the supply, they were oversupplied. There was more. There was not a demand for this, right? So this is how you put your Fibonacci, right? Your Fibonacci retracements right here. These are my numbers. And I like to see where the price was, how many times price hits in the 50% range, right? This is the 50% range. And we know that price has to break through here. It has to. It may consolidate, may retest, but eventually it has to break through. So look at this. When it reached here in 2013, right? The demand for it was strong. And look at this. It's been on an uptrend. Look at this uptrend. It tested here on the right. You can buy supply and demand from support and resistance, guys. So right here is a support, and right here is a resistance. All right. So you can definitely buy in here. Look at this. Some people trade off supply and demand with support and resistance. So look right here. Look at the demand for this. Okay. Went up, guys. You would have made, like, it doesn't look big here, but let's look at these pips. Doesn't look like it is a lot, but it's a lot, guys. Right here. Look at that. Oh my God. Do you see what I'm looking at right here? Why is supply and demand? Hold on, my Facebook Live. Look at this. Look at this, guys. A lot of pips. A lot of pips. You guys would have made, my God, maybe 20, close to 20-something thousand dollars, depending what was your lot size. But the demand for it's here. Look at it now. Let's zoom in. Let's zoom in. Look at this. Right now, from February, this is a week. So the month, okay, right here, this is the new candlestick for the beginning of the week, okay? We don't know what direction is going to go in yet. So you're not going to be able to make a decision for a long-term trade right here for a supply and demand. If you want a long-term trade, you're not going to be able to make a decision. Remember, the market just opened a few hours ago. So you really got to see where the market is going, guys. Patience is key when it comes to supply and demand. But look at this. I really want you guys for YouTube. The demand for it was for quite, oof. Look at this. The demand, oh my God. Look at this demand, guys. From right here, really started. And it's just been on an uptrend, guys. This is insane. So right now, the sellers, the market makers are saying, okay, it hit its all-time high. Look at this whole time high. Let me get another chart. Let's go see. Right here. Let me add this. So right now, this is where the demand was at 1.45978. Okay? The buyers, the demand for it wasn't there no more. So the market makers had to bring it down, right? So right now, this is a good time for the sellers. Once it reaches its peak, its high, now it should be dropping, right? It should go drop. So now let's look at a daily chart, see where it's at. Okay, this is the daily chart. I'm still in the same currency pair. And look at this right here. This is where the market just opened, right? Just opened. Let's look at the 4-hour candle. Let's see what it's doing. Okay. So you see on the 4-hour chart, look at this. Do you see this long wick right here? Do you guys remember what this wick really meant for you guys? This long wick that the buyers is called like an indecision candle. The buyers were trying to push, they lost, and now it's been on a downtrend. It's been on a downtrend since, let's see right here, since January 20th. This has been on a downtrend right now, guys, for a while. So let me put some support and resistance right here. Right here. Look at this. Look right here. Look, you want to trade supply and demand? All right, well, now you guys got it.
Hold on. Let me fix this. Okay, let's draw another one. Look right here, guys. I'm gonna explain this for you right now. Hold on. Right here. Okay, let's draw another one. Let's draw another one. Let me fix this trend line. It has to be better. Okay. So people trade all the time between support right here and resistance for supply and demand. These are facts, okay? So if you want to insert your Fibonacci retracements, you could. Start from here, from the high, all the way to your low right here. Nope, let me fix it. Hold on. I'm OCD, I like things to be perfect. Okay, so we see, remember the 50% right here, guys? Boom. It breaks through, right? Didn't I tell you? It has to either break through either way, right? So people can use the 50% to see where price has been, right? And you can use a 61.8. So right now, this is its all-time high, right? On a 4-hour chart, guys. Only a 4-hour chart, and this is the low, right? So, for instance, and you see this trend line, okay, right? Right here, it tested, right? It broke through, hit again, try to hit again, and guess what? 1, 2, 3, boom. What happens here? What do we tell you? You can either hit twice, hit once, hit twice, and on the third time, it broke through. It broke through support. You could have gone here in the middle of your candlestick and roll the wave down to here. You could have take profit 1 over here, or you could have take a profit 2 over here, and you could have had to take profit 3 over here, guys. Woo! This is money. You want to trade supply and demand, put your support resistance, put your Fibonacci retracements, look where price has been, look where it hits, look where it's going, and this is how you make money, guys, okay? I'm going to go more in depth, but this is the first time that I'm going over and talking about this, so this is just going to be the end of our session, and Melissa wrote the homework. So I want you guys to write down the homework assignments. For those of you who are really taking this serious, we'll write it, and for those of you that don't want to or feel like you don't need to, that's all on yourselves. That's perfectly fine. So I stopped screen sharing, and let's see that these viewers can see what we're doing. So Melissa wrote down the homework, and she's going to go over the homework assignment, guys. So here's the homework. Take a snapshot of it, snap it. And I hope the YouTube viewers can see it. Of course. I'm going to go see if I can fix these for our people. Right here.
For our YouTube users. Okay, guys, you may not be able to see, but at least you can hear. So I'll repeat this a couple of times for you guys. The homework for tonight. Number 1, I want you to pull up a chart, any chart you want to look at, and I want you to find a false breakout. Right now, I told you what a false breakout is, right? I didn't show you on the chart, but the way I described it, really, it speaks for itself. I want you guys to find it on the chart. Find me a false breakout, right? And then I want you to place a trade on your demo account. I want you to send us a screenshot of the false breakout you found, right? And I want you to send me